The real financial system isn't the one you see. It's the one built in the shadows, unregulated, unmonitored, unstoppable. And once you understand how it works, you'll realize the danger was never in the stock charts or government budgets people obsess over. The danger is in the trillions of dollars moving silently between institutions that dawn at tea, appear on balance sheets, don't show up in public disclosures, and don't answer to any government on Earth. One failure here can trigger a global recession. And history shows it already has. The world simply didn't notice until it was too late. Most people imagine the financial system as the one they are allowed to see. Banks with logos, regulators with titles, markets with opening bells. But beneath that world is another structure entirely. A kind of underground empire built on short-term loans, offshore entities, repackaged collateral, synthetic leverage, and obligations so interconnected that a single liquidity freeze can paralyze the global economy in hours. This is the shadow banking system. It is bigger than any government, faster than any central bank, and invisible to anyone who thinks money follows rules. It doesn't. It follows incentives, loopholes, and a hunger so powerful that entire nations depend on it without knowing it exists. You don't get warnings when the system begins to fail. There are no alarms, no speeches, no guidance from the institutions that supposedly control the economy. Shadow finance breaks in silence. It collapses behind closed doors. It spreads through wires and balance sheets long before anyone can see the damage. And by the time the public realizes something is wrong, when ATMs freeze, markets crash, and governments panic, the shadow collapse is already complete. Governments hate admitting this truth because it means they are not in control. They regulate the visible surface of the financial world while the real machinery operates beneath them. For decades, officials have insisted the system is safe, transparent, resilient. But every major crisis reveals the same pattern. The worst failures never start where people expect. They start in the shadows, with institutions no one regulates using mechanisms no one understands to hold together liquidity that no one else can provide. The modern world runs on liquidity that must be borrowed, rehypothecated, and rolled over constantly. It is a system addicted to velocity, not stability. Money in the shadows is not like the deposits in a normal bank account. It's borrowed overnight. It's collateralized by assets that are themselves borrowed. It's moved offshore into jurisdictions designed to hide it. It's doubled, tripled, and magnified through repo markets that trade trillions every single day without public scrutiny. And the moment trust disappears, the liquidity evaporates instantly, vanishing like breath on cold glass. If you want to understand the danger, you have to start with the moment the world nearly collapsed, without anybody realizing why. In 2008, while the headlines blamed subprime mortgages, the real panic began when something far more critical froze. The money markets, the overnight lending operations, the short-term funding pipelines that kept the global financial system breathing. A single fund, just one, broke the buck, meaning its value slipped a fraction below $1. The tiny crack set off a chain reaction that threatened to turn every money market account on Earth into a collapsing asset. Suddenly, banks couldn't borrow, dealers couldn't roll their positions, repo markets seized up like an engine without oil. Liquidity disappeared so fast that policymakers later admitted they had no idea what was happening until the entire system was within hours of a total lockup. It wasn't mortgages that brought the world to its knees, it was shadow liquidity. It was the invisible arteries of global finance that started collapsing first. Mortgages were just the match, the shadow system was the fuel. And the terrifying truth is this: the system is far bigger today than it was before that collapse. More complex, more interconnected, more fragile. Shadow lending became the backbone of the global banking system after 2008 because traditional banks were squeezed by regulation. Capital requirements increased, transparency rules tightened, governments demanded safer balance sheets, but the world still needed credit. Corporations still needed short-term funding. Investors still needed leverage. And so the business migrated into the shadows, into hedge funds, private credit firms, offshore banks, structured investment vehicles, money market funds, and repo networks that regulators can't map because they don't officially exist. When governments tightened the rules, the system adapted, not by becoming safer, but by moving out of sight. The most powerful piece of this hidden machine is the repo market, repurchase agreements, where trillions of dollars are borrowed and rolled over each night using securities as collateral. It is the heartbeat of the shadow system. It never sleeps, it never slows, it cannot stop for even a day without creating a cascade of failures. But the collateral used in these trades is often the same. Collateral passed through multiple institutions, creating layers of synthetic stability on top of assets that may not even be liquid if panic hits. This is the part governments can't control: the speed. Regulation works slowly. Repo markets move at the speed of light. Then there is the offshore world, the jurisdictions that allow entities to operate without meaningful oversight, where leverage can reach levels impossible inside a regulated bank. where trillions move through balance sheets engineered to be opaque by design. Every major financial institution uses these structures. Every major country relies on them indirectly. And yet, no regulator can see through them because they aren't allowed to look. They exist in a legal no man's land that quietly holds the world's most fragile debt. If you want proof of how dangerous this can become, look at what happened in China when its shadow lenders began to unwind. For years, China's official banking system appeared stable, well-capitalized, tightly controlled. But beneath that surface was a network of trust companies, wealth management products, off-book loans, and unofficial lending channels that supported entire provinces. When growth slowed and defaults began rising, these shadow lenders were the first to crack. Developers collapsed, municipal projects stalled, trust companies froze withdrawals. The panic didn't start in China's official banks. It started in the shadows, then threatened to swallow the visible banking system with it. The pattern was the same as 2008. The collapse began where the government could not see. This is the global pattern of shadow finance. It is always larger than expected, always hidden until the moment it fails, always interconnected in ways that make containment impossible. And every country depends on it, even if they pretend not to. The most unsettling truth is that modern economies require this system. Without shadow liquidity, global trade would slow to a crawl. Corporations couldn't finance inventories. Governments couldn't roll debt cheaply. Asset markets would shrink instantly. Shadow banking is the dark engine of modern capitalism, too essential to eliminate, too dangerous to control. And the danger is building again. The signs are subtle but unmistakable. The demand for high-quality collateral is rising faster than new collateral is being created. Repo spreads are becoming more volatile. Offshore funding costs are widening. Private credit has exploded to historic levels, replacing traditional lending with opaque leverage. Money market funds are now so large that they hold more power than some central banks. And the dependence on overnight funding is so deep that a single disruption, one unexpected failure, one liquidity mismatch, one forced liquidation, can freeze the system in minutes. Governments pretend they can monitor this. They talk about macroprudential stability and procurement systemic risk tools, as if these instruments can reach into the shadows and force compliance. They cannot. The shadow system obeys no regulator. It follows the logic of markets, the hunger for liquidity, and the mathematics of leverage. And when something goes wrong, governments always react too slowly because they are always looking in the wrong place. The next global crisis won't start with a stock market crash or government default. It will start with a liquidity fracture in the shadow system, something the public won't see, won't understand, and won't hear about until the consequences are already irreversible. Part 1 ends not with a pause, but with the tightening grip of the truth. The shadow empire is growing faster than the world and its ability to control it, and the cracks are already spreading beneath the surface. Part 2 begins without a breath because that is how the system behaves. Seamless, relentless, indifferent to the boundaries humans try to impose on it. The narrator continues as if the darkness never stopped closing in. And if you want to understand where the next fracture might emerge, you have to look beyond the headlines and trace the same pattern that is repeated across every financial collapse of the last 50 years. It begins with hunger, demand for liquidity that outstrips supply. It grows with complacency, an assumption that markets will always roll over their positions because they always have. And it ends with a spark. Some institution somewhere failing to meet an obligation that seemed trivial the day before but becomes catastrophic in the moment it snaps. This is the part governments fear most. The shadow system does not fail gradually, it fails all at once. As borrowing costs rise, institutions that depend on rolling short-term debt find themselves exposed. Something as simple as a treasury basis trade, executed by hedge funds using extreme leverage, can turn into a detonator. Something as dull as a collateral call can force liquidations across markets that have no direct relationship. Something as small as a missed overnight funding rule can cascade into a global freeze. And because these events happen inside the shadows, they unfold too quickly for central banks to react until the damage is already expanding across borders. The world believes central banks are all-powerful, that they can print infinite liquidity. But shadow liquidity is different. It is not money governments can create. It is money created by leverage, rehypothecation, and institutional trust. When that trust vanishes, no central bank on earth can replace it instantly. There are signals now, warning lights that flicker only for those paying attention. Repo markets showing stress in nighttime trading, offshore dollar shortages in emerging markets, private credit firms expanding into risks traditional banks avoided for a reason, insurance companies guaranteeing products they can't liquidate in a panic, money market funds sitting on trillions that can flow out in seconds if confidence breaks. The structure is tightening, the pressure is rising, and the world is acting as if the lessons of 2008 and China's shadow collapse were never learned. Governments want the public to believe they are prepared. They want people to think regulation keeps the system predictable, but they know better. They know the real danger has always been the same. The world is built on financial structures no one fully understands, borrowing mechanisms no one fully controls, and liquidity pipelines no one can see until they fail. This is the forbidden truth, the narrator reveals. You are living inside an economy held together by a shadow empire that can unravel faster than any government can respond. And the next unraveling won't announce itself. It will slip through the cracks, freeze the arteries, spread through collateral chains, and reveal itself only when the damage is irreversible. And when it hits, the collapse won't look like the last crisis. It will be quieter at first, faster, more interconnected, more global. It won't start in the visible banks, or the stock exchanges, or the markets people watch each morning. It will start far away from the public eye, in short-term funding desks, offshore liquidity pools, leveraged credit networks, synthetic collateral chains, and automated funding algorithms that move billions in seconds. You are not supposed to understand this system. That is why it works. That is why it is dangerous. That is why governments fear it. And that is why the next crisis will feel like a sudden, violent storm, even though the warning signs were always there, hidden in plain sight. The shadow banking empire has grown into a machine larger than the governments that pretend to regulate it. And the final warning is simple, cold, and cinematic. When the shadow system breaks again, it will not just destabilize banks or markets, it will rewrite the structure of global power itself.